Market recap for Wednesday 13th of May 2026. Today's a refreshment, I can't lie. I don't know. After my week break or whatever, I can feel like this is the first day like I traded with confidence and the market has actually just, you know, acted accordingly. That's if that's something, right? Like we seem to be going back slowly but surely to normal markets. And I hope we continue this way because we've been at war in these past few months, man. Like I just started to hate the market. That's how bad it was. But now, I don't know. Today, yesterday, even though I didn't trade, I just looked at it and I was like, wait, this is worth trading, right? Because I was on like some break, right? I wasn't waking up on time and stuff, and I was just not bothered. But now we might be onto something. We might be so back, but we'll never know. Let's give this month, few weeks out and see what it does. Anyway, let's explain the day. Let's explain my bias, what did I expect, blah blah blah. Alright, so this well how do I explain the day without just saying this? Come on, bro. Let me get to the daily. I'm rusty, bro. That's one of the reasons for the day. So yesterday's candle, what do? We go all the way down, right? I didn't measure this wick actually. This looked like the lower quadrant. It's not. Barely missed the lower quadrant, but I don't care. Anyway, we go all the way down, right? And we close high up in this daily city. This is like this little thing, right? In its how do I explain? Like this pattern, like pattern. I wouldn't really try to call it pattern, but like one price does this, right? Explains that the next one or two candles will aggressively be high, right? Like it will come take the high. So like I would normally use this in like a 1 minute, but it's the same thing for the daily, right? I would expect this wick to hold. I'm looking at the upper parts of the wick, the quadrants, the eighth, the whatever of the wick, the upper parts, and then I'm looking for an expansion, and an aggressive one. That's why my bias yesterday's video I said I'm bullish. Like there was just no two ways around it. I'm not bearish. I'm not like 50-50. I'm bullish. Okay, that's what I expected. It had to come. Why? Because on Monday we started engineering these lows. So we had relative equal lows. And on today's price action, if we, by the way, there's not really much in it. Let me just check the 1 hour real quick before I say anything. Not much in the 1 hour, other than us coming down to the rejection block, but we'll explain that later. So let's get to the 50 minute. Okay, so what did the 50 minute do? We have Monday high, we have, well, this is like, I don't know why it's written twice, but yeah, Monday high, we have relative equal highs basically that we create today with London, with this Monday high. So what do I expect? This is Tuesday high actually. So Tuesday, Monday high, they're all both relatively equal. And today's London high. It was obvious that we were gonna do a manipulation. I didn't know where to though. That's the only thing that I didn't know for today, right? Because it wasn't. Sometimes it's most of the time actually it's obvious where we're gonna stop. This time I didn't have a clue in the world. Let's just say that, right? But after that, I'm expecting an aggressive, right? An aggressive push higher. What mainly I'm looking for the target would be this. When it's simple and clear. I'll get rid of the lines after I explain. So just bear with me. Bear with me. Bear with me. Won't you look at that? Hmm? And that's the TP for that. That's what I'm expecting for today's price action, right? It's as simple as that. So once we go to the 5 minute, and let's actually put that back here. Just get rid of this, right? So you show it later. All right, cool. These lines, so whatever. So let's just make sense in here when you look at it this way. Why? because this is our this one. Where the hell is our opening? Oh, I'm on the 15 minute. I was gonna say, so messed up. This is our current daily opening range gap, right? So just remember, let me just make it 2x, right? This one. And this is yesterday's opening range gap. Is this? This is the wick on the daily, isn't it? Right? And this is our wick on the daily, right? This is what I was looking for. And if we do maybe, right? I'm just basically measuring that daily wick. Remember the daily wick that I was talking about? I'm looking at how we're gonna react on basically the upper portion of it, upper quadrant, and I'm not really looking for the midpoint. I'm looking at this range, how we're gonna react there, right? If you want to be more whatever, right? You can see that's why that was that the low. Right? Do the 16th, right? But now we're doing too much. It doesn't matter. You don't have to like push it to this whatever. Anyway, that's why that was highlighted. So what do we do on the open? We come and close our opening range gap, right? So first thing that I want to see is our ability to get to midpoint, because that could have been enough to start pushing higher, right? Second thing is liquidity. What do I have in terms of liquidity? I have AM buy side from yesterday, right? As you can see, is below us. So let's just drag this right there. This is a 50% of a whole different range. I'm gonna explain later. Actually, let's put that back. And this opening range gap that we didn't even get to midpoint of. So all these ideas help, like the closing price. I mean, the closing of this opening range gap is a confluence with this high. So what's your highest probability trade is getting to this high, right? Let me explain what this high is later. So if I'm expecting price to go here, best case scenario, second best case scenario is here, and the low hanging fruit objective is here. Why here, by the way? Because this, if you can already see and spot, is the original consolidation. What does that mean? There will be a market maker buy model. First stage, second stage, third stage. I mean, well, if you want to be specific, low risk entry, first stage, second stage distribution, unicorn, right? Simple, no pullbacks, and it's just aggressive in one direction, right? So until this high, after that, you can do whatever you want. So I know this is a market maker buy model, so that's why I was confident in us taking this high. But this high is like your low hanging fruit objective, and also is more than enough points. How many points did I get? 270 points. I think that's more than enough, right? Can't be more greedy than that. Anyway, so now we know what we're looking at. Now we can get rid of this opening range gap, and I'll just try highlight, just leave the midpoint for now, right? And on top of that, let's get rid of this opening range gap because we use it now. Okay, now that we have a clear chart, what was my initial bias coming at 9:30? So I was looking at two things. First thing, I wanted us to take this low, right? This is our initial low, right? By taking this low out, right? We're already in discount of this range. From this low to this high, I don't expect Asia low to be taken on NQ. However, on ES, I do expect it to be taken. That's what I was looking at. So I had just that low highlighted, and I expected an SMT, right? Right there, we take the low out. And I knew that's not enough, right? I knew even the SMT, but I just knew that was not enough. And I'll guess call it rust. I'm rusty or whatever. Anyway, that's why I expected. We come to the midpoint, we take that low out, right? And that could potentially be enough for us to change the market structure and go higher. However, my rusty, stupid, whatever, I didn't look, right? Because it's a market maker's L model, right? Low risk sell, first stage, and the unicorn, right? I didn't wait for all the stages, right? And then the low risk, small money reversal. So even if you weren't looking at it like this, my initial entry was based on thinking this is the first presented fair value gap, right? Why is this gap a problem? Because it's inside this range, right? And I knew when looking at a highline, I'm like, in my head, these normally don't be the first presented fair value gap. You can't use that as a first presented fair value gap if it's in the range. I don't care what you think, what you say. That is not the first presented fair value gap, right? So I should have not used that, and that was my fault. Okay. So once we closed above it, I entered right on the high right here, and I instantly realized after the entry, you know when you enter and you're like, you fucked up basically. I knew I'm cooked, right? The second this candle did this, there was no discount sensitivity at them. I already basically knew I'm most likely cooked. I don't know why I didn't close it and let it go, but yeah, that was the first loss, and I was like, I normally after first loss I get off, but then I was like, you know what? No, let me just wait. Let me see, right? Because that's me. That's me messing up. That's not me like not knowing what the day is gonna do. Okay, so once we go down and close our opening range gap, right? Like I said, I don't want this low to be taken. As long as this low doesn't get taken, I'm fine. Like this whole idea is still valid. What do? We come back and close above 50% at this range. So now, and also come back into the, think about it. This is the opening range gap. If we're going to be bearish, we should not be closing above the midpoint of our opening range gap. We should keep being heavy. Once we closed above this and you're alright, cool, we're bullish. Let me look for an entry. So I'm looking at this run up, right? If this is truly a market maker buy model, the first the low risk the low risk what am I saying? The low risk buy is right here. Okay, watch this candle right there, 952. If this is truly the low risk buy, it should have opened, went lower, at least to this opening price, and then went higher. Because it didn't do that. See, that's very specific. Once this high gets created, this whole run, I don't know how to explain this, but like this whole run, nothing will matter until we reach that. Okay, like it won't do anything. It could stall here for the whole hour if it wants. It's not gonna take this high until this lowest buy has been hit, and because I know that, that's why I had my limit order here. Did I? Oh, it's been taken off, but I do believe that's what my limit order was, right? My limit order was right here on that open price because I knew it's gonna come back into it, right? Once it did, and then the bodies are closing above midpoint, I knew basically it's game over, right? So I'm just waiting for one thing to confirm this model. What's that? Once we try to leave this range, we need to leave it in a breakaway cap fashion, right? You can see breakaway, breakaway. And ultimately, after that, don't ever expect price to be entering, to retrace into this breakout. It never does. It just never does, right? Because this was enough, and now it needs to go, right? After that, it needs to go. So sometimes when I miss this entry, I would have like a market entry just here or something, just knowing that we wouldn't bother with any of these. We'll always create one, two, three, couple of breakaway gaps basically until we get to the high. And after that, you can use, if you missed, there's three entries for this. If you miss them, that's it, you're cooked, right? The first one is the low risk, your best entry. If you were kind of lost and you didn't catch it, then this market entry, once we start, like once you see just one breakaway gap like there, you should enter just knowing that it wouldn't touch it, right? Stop loss at the low if you want to be safe, but it never does it if you're right. And then if you miss both these two entries, your next entry and last entry would be the mitigation block, right? Because this will be your first stage, right? Once we go higher, we're gonna come back to it eventually, right? So let's say we went higher here, the first stage will offer that. So this could have been the entry, this could have been the entry, whatever. Just have a limit order on the mitigation block. And that is enough. After that, then that's it. You got no more entries because I wouldn't care about the unicorn because the unicorn will always be too far up, and I normally like to enter at them, right? So that was the entry. That was the trade, I guess, and it was basically from this low, stop loss at the low, right? Trying to keep it conservative, and the TP is at this high, right? Knowing that it could go higher, but that is more than enough, 270 points. So yeah, that's the market recap. And what I'm watching is for the second stage would be this, right? This is this order block, right? Why am I highlighting it in the 1 minute? I'm trying to be accurate, but if you look at this in a higher time frame, this will be one down close candle or whatever, right? So this opening price is important. Once we close above this fair value gap, right? This is an hourly, right there. I'm waiting for the unicorn, right? So unicorn could have been this low, right? But technically, the normal way we do it is do the stall, go higher, and then come and take these lows out, right? So that's why I was watching this opening price. Boom, we tag it, and that's it. After that, you got the unicorn. And it's just simple as that, basically. And yeah, you just get your TPs. PM session. Interesting that we didn't get to it within the exact day, but hey, we got to our target. You know, if you hold through Asia. But all of this is more than enough, right? If you're targeting the market maker buy model high, that's enough. Where it could have failed right here. That's where it could have failed. But I had no expectation of it to fail because we were holding this. So yeah, I feel like that's enough. Yep, and more than detailed, I guess. And yeah, that's the day. Anyway, let's get rid of all of this. What do I expect for tomorrow? Essentially, this area now becomes kind of a balanced price range. So I don't really expect any pullbacks, right? Like I would not expect price to even bother like this low. That's it. It could come back anywhere in this range. However, it can't come to this low. This from here to here is a balanced price range. And we expect bullish price action for tomorrow as well, unless we keep going higher, and then on New York Open we're gonna just open and dump. But you know, we get max to these lows, right? The PM low. So that's really the max. That's the only two scenarios for tomorrow. It's either we're gonna already have our retracements, right? Or we're gonna be at the highest point in New York Open, and then we're gonna just play the dump, and then it would eventually go higher later. So yeah, that's the market recap. I'm glad that the market is turning back to normal as long as the bodies are back in charge, you know. So yeah, that's the market recap. Peace out.